Hi, again, thank you for spending time with us at the event, and thank you very much for the questions that you put forward. The question sets around scale that we never had time to answer include, number one, how do we scale from $2 million a year of revenues to $10 million with limited resources in a services business? Two, how do I create time to maintain consistent focus on growth? We are growing exponentially, and my focus and attention is needed right across the business to hold it all together. Yeah, that's about being in the engine room. Number three, how do I attract good technical and customer management talent and then hold on to them after I have invested in training them? And then number four, what are the risks and opportunities I could face running my company at its current full capacity? I think out of those four questions, let me start with number four and deal with that in this particular session. What are the risks and opportunities I could face running my company at its full current capacity? I think there's some tremendous risks that lie ahead. We are now moving out of the COVID lockdown period. Increasingly, it's becoming more and more evident that household income has expanded dramatically. Job and employment absorption is growing. There's a tremendous amount of money that's been put into the economies, and we're expecting to see significant growth rates, sure, off a slightly smaller growth base, but right across the economy. Any business that's running at full capacity means that should you take on new business, the likelihood that quality will fail is exceptionally high. Whether it be quality of service, quality of the product, all in all businesses are services businesses. And that means that the experience of clients who are experiencing balls being dropped and things not working as well as they ought to creates an experience that's negative, it harms the brand, and creates bad word of mouth activity behind it. The second challenge over here is that if there's demand for what it is that you have to offer, and you're turning customers away for the simple reason that you have no capacity to take them on, it means those customers and clients will be going to competitors. So in many ways, you're building your future competitive muscle against yourself through that by strengthening your competitors as a result of turning business away. Because of full capacity, you're weakening your future opportunities. The third is burnout. Not burnout only of yourself, but burnout of your entire team, especially those most loyal to you. And that burnout means, it has terrible consequences. Because losing team members, especially when you're running at full capacity, if you lose a key individual, it means that full capacity suddenly moves down from 100% to 130% of strain on the business itself. You cannot afford to lose your team. And then I think the final risk over here is to what end? If you're running at full capacity, it means that your value propositions in the market are strong, your service delivery is strong. Why not grow from there? And that means building a business slightly differently, because you're building a business to attract funding and capital. We have significant growth ahead of us in this market. Next year, the growth rates globally are expected to lift even further, and make hay while the sun shines, because this could provide you with significant additional growth on an already lean business, great profit margins supporting a fantastic exit 2-3 years down the line. I hope that helped. I hope it gave you some insight. I'm sorry we couldn't get to all the remaining questions, but we will find a time to do so.